What is going on, everybody? And in this video, we are giving you a state of the market and stock picks for July 26, 2022. So if that sounds like something you're interested in, consider subscribing, as I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious, phenomenal, extraordinary market in which we are currently in. But if you cannot see what is on my screen, this is something I've been talking about and is going to be an issue moving forward. Things are playing out as I have kind of come to this conclusion, come to this thesis, building this thesis into what's going into right now. And what we got here was something that happened after hours, obviously. It's not in particular to Amazon, but you have to understand that this particular article, essentially Walmart came out, has reduced its sales outlook for 2023, given the results of Q2 due to elevated inflation. Elevated inflation. Now, the reason why headline inflation, like I talked about, is a big issue is because people are not purchasing anything else other than the bare necessities of life. I don't know why I keep saying that, but nonetheless, are purchasing just the bare bones of stuff, which is your food and your energy. Now, with that being said, what is going on here is because food is getting so high, because energy is getting so high, people can't afford to pay for entertainment. And so where entertainment is coming from is people putting the entertainment costs on their credit cards. This is why American Express has seen a 35% increase in growth, and concerned about the future, about people essentially spending for entertainment fees, because again, the basic necessities are getting extremely high. And now you got Walmart reporting that they're looking at things being extremely bad right now. They're coming off of Amazon. All these retail sales are coming off of mass amount of surplus. They've talked about that they are trying to reduce costs to absolutely nothing to get it off the shelf, so that they can restock their shelves with new seasonal items or whatever the case is. And so now you're getting a lot of issues here. And so this is, again, playing out as expected so far. Again, the biggest piece going into this week is going to be the Fed. But we will get another piece of the puzzle tomorrow, as we do have Google and we have Microsoft. Now, if the forward guidance on Google and Microsoft is bad, you can guarantee the market is going to come crashing down. And then we will see what the Fed provide. If the way things line up, if there's forward guidance is really bad on those high-tech growth names, and then you look over at what's going on with the Fed, and they decide to go 75 points or a 100-point basis move, we're going to be in a lot of trouble. That could be enough to put us in the panic mode and to cause us to break that major support I've been talking about, which is the 36.36, which is roughly around the 100-point basis move. Now, I think even a 75-point basis move could potentially do that. I think anything over a 50 at this point, people are starting to see the impacts of what these massive rate increases are doing to all these companies, and realizing, yes, well, retail, right? Walmart, I don't know what percentage their revenue is from food, but considering that they have all the gas prices and everything tied into that, and then food shortages as well. So you got the whole aspect they're toying with, that's taking a massive amount of Walmart down. Right, and so you'll see that on Target, or you'll see the sympathy play across the field. So you'll see that in Target, and you'll see that in Amazon. These are not good signs, right? We saw these months ago. People were ignoring them. Economists were ignoring them. Again, because the Fed is telling you, no, don't look at headline inflation. That's not what we watch. But you have to understand that people are going for the bare essentials, right? That's going to drive up demand. And considering farmers and everybody else, right, they have to still run off of oil. So you can say what you want about headline inflation, but you have to understand that the farmers are really struggling if they're paying ridiculous amounts of fees for gas to cart around food to whatever they have to do to go through the crops and whatever they do with the corn, pull corn, whatever they do with their machines. I don't even know what it's called, so my bad on that. But nonetheless, to do all that stuff, right, you have to understand that all that is costing gas, and gas has been extremely high for a while. And so that's digging into all their profit margins. So it's harder for them to plant new crops and to do all these things when parts of your revenue are taken away. It's the same impact on companies, and this is what you're seeing with these massive. It's not bad if we've seen these numbers of inflation before, as far as our interest rates, just to say. So you see these interest rates pile up, right? And that's fine, but if it's in a slower manner, right, it gives the companies time to adjust. But when you are increasing, you are destroying profit margins. And it puts companies in a very tight bind to where they have to just start cutting because there's nothing else they can do. And so, again, if the Fed continue to be very hawkish and continue to drive rates to try to chase core inflation, which again, I believe it's going to, this month has been really very pivotal, but now it's shifting into the next headline inflation, next core inflation report, in trying to determine, is it coming down? If food and energy continue to skyrocket, it is going to be an issue. It will continue to be an issue, again, as long as Russia has, and Russia and Ukraine are continuing this battle. It's going to be a major issue. And it can get extremely bad, to the point where nobody's going to buy anything. It will turn eventually, yes, but right now things just aren't looking good. I think you still have to consider you still have another quarter. These big companies are just stock split. They just are starting to not hire. You have to give it another quarter, right? You have to give it another, I think maybe out of Q3, when Q4 actually starts, when they start reporting Q3, at that point you might see some relief. But again, it depends on that next report, the next core CPI, the next headline inflation. What is going on, right? Is the food and energy continuing to skyrocket? Because they continue to skyrocket, we're going to be in big trouble, right? And it's gonna put ECB in a tight bind. They've already forewarned a bit, right? They can't continue to push rates at a crazy, ridiculous rate because it's going to cause a crash, a stock market crash. Everything will crash, all prices and everything will come down. And we were seeing that for a while, but now it's starting to become more relevant. It's starting to become more obvious in what's going on. And so with all that being said, again, tight bind. We really have to see what it is that is going on in the next steps forward. And so, again, just another key to the puzzle today. And this is why I wanted to open this up with Amazon and showing you the massive drop it had after hours. Walmart had the massive drop after hours too. Massive drop. Look at that. Target, massive drop. So these are things you need to be watching for. These aren't things you're going to read in the newspaper. These aren't things you're going to hear from any economist or anything like that. These are things you have to look out for yourself. You have to read up on this stuff. Yes, it takes time to determine these things, right? But that's why I do this channel, because it helps me refresh my memory, what's gone on in the day. It helps me, relay this information to you and kind of know what to be looking for in a market. Because again, the information you're getting is just fluff. It's not the correct information. We all kind of know there's no real truth to a lot of stuff that's being told to us, but to really uncover the truth, it takes a lot of understanding of what's really going on and what really holds weight, what really doesn't. Again, that always shifts from time to time. It's not always the same. Right now, we're dealing with inflation, and right now it's headline inflation. Food and energy do matter. Even though they're volatile, they're going to continue to be volatile as long as Russia has has a grasp on oil. And this morning there was rumor, I don't know if it was clarified, is if Russia shut off the pipelines. That's something we talked about that would be a black swan that could cause and wreak havoc. And I got to look and see if that has truly happened. But if that's the case, then we are just in the start of the storm. This little rally we got, this pre-earnings rally, is just the eye of the storm, right? Like that, you're going to get some really nasty downside if things if tomorrow's forward guidance is bad with Microsoft and Google, and the Fed come in 75. I mean, the Fed can come in at a 25, 50, 75, 100, whatever you want to. The market may rally off of anything under 75, even 75. But you have to understand that any more increases from this point, you're doing more irreparable damage, right? It's just going to cause us to fall further down the hole is what's going on. And we will continue to go further down the hole until we actually get a report that shows, right, if the Fed's trying to front run it, they're going to continue to front run it until they get a report that says it's coming down. The headline inflation comes down, then they might dial back. And how much are they going to dial back? Are they just going to stop at that point? They may just stop. And then we might see some ease. But if they continue to raise it, even 25-point basis move, if you're going back to back to back to back and just keep raising it and raising it and raising it and raising it, right, you are driving everything away. You're driving all potential customers that want to purchase anything, right? Everything is supply and demand. And if you are destroying demand because your interest rates are just so high, nobody can afford them, right? No one's willing to put that amount of risk on the table. Then you're really looking at some big issues. And then you're looking at deflation and then potentially stagflation because nobody wants to buy because things are just way too high. And we're getting there fast. And you're starting to see the delayed reaction of these fast rate increases, right? You're not giving anybody time to adjust. There's a difference when you slowly raise the water and allow people to adjust. People can make an adjustments when it's easy, but when you start throwing on, rate increases after rate increases, and then these big historic rate increases, 75-point basis, 50-point basis, right? Potentially 100-point basis, right? That's just absurd. And it's going to do major damage. And to think it's not going to do damage, we've had it before. Yes, we have, but you have to realize we were at zero, right? We started at the beginning of the year at zero. And then we just started raising, which was fine. The market was fine with that. But then we started just adding on and adding on and adding on and adding on. And it's just too much. You're not giving the economy time to adjust. And then that's what happens is you cause crashes because of that. And this is not saying that it's a flash crash. These type of crashes normally take time. They move slow. They're not fast. You get this nasty chop that we're getting is what we see. So with all of that being said, I'm going to make this video. I'm just going to go over the basics here. Again, SPX, it's holding flat. That news today, it's really not looking good. Tech was looking really weak today. I'm actually surprised we held. We broke the trend. It's not saying we can't go up. I think even if we come under 75, that may be great. But if forward guidance is bad, people are going to say, well, what's the point of even going up? Things are about to get really nasty. And we had our fun little rally here. We could reverse this thing and head right back down. And again, if it's 75, we're going to 38.50. If it's 100-point basis move, 36.36. If we get bad forward guidance, I can guarantee we're going to probably drop straight down to the 37.27 at that point, because now you're introducing panic. Everything is looking really bad for 2023. We're still only halfway through 2022. So what does that mean for 2022? So that is my concern. But I do think we can start dialing back sometime here in 2022 with the Fed and kind of seeing how the Fed is moving. But again, it really depends. It depends on Russia. It depends on the Fed. If the Fed can dial it back and chill out, then I think we can stop it. Stop deflation at that point. But was that going to stop inflation? Or people are just going to stop buying? So if people have extra money to spend, they're going to spend it, right? They're going to entertain themselves. They're going to do that. Then you might see inflation swing back more into core inflation, where you're seeing less of it now. And so this is the the seesaw you're playing right now is you're playing between core inflation and headline inflation, right? Because right now everything is driven up extremely high on headline inflation because people are going for the bare necessity, or I keep saying that, but the bare necessities, and realizing that what's going on. Again, people are staying home, they're spending more time burning more electricity at home than they are outside, and doing a lot more things like that. They're doing cheap things, right? Staying home and doing that. And so that's driving up the demand in that sector. And so that's why inflation is coming there. And so we have to see how this thing plays out. But nonetheless, I mean, we still got headroom to 40.50. Obviously, we broke the trend. I think tomorrow, if we gap down, we could be in trouble. We got support here at the 38.90. Again, it really just depends on how bad we gap down. I don't think people quite grasp what's going on with Walmart and Amazon. But if Microsoft and Google guide down, this thing is going to gap a lot. And then we're going to be in some trouble. And then you're going to potentially start hitting panic, especially if you can get a 100-point basis move on top of the really bad forward guidance. So the way things land this week is really going to potentially cause some panic this week. And I've been talking about, we've been walking on eggshells all week or for a while now. So we could talk about the dollar. I think dollar is still holding very well. I think this thing is actually going to start running. The fact that it's holding extremely well is concerning. All right. Now, if the dollar starts selling off and the market starts selling off, that'll be interesting. Tandem that we haven't really seen just yet. So if that does happen, we'll have to see how that plays out. Bitcoin, same predicament right now. It's normally, again, when you get a break on the 20, you get a push, and then you get a retest of the 20, then a break. Now, if we get bad news tomorrow, this thing's going to gap down, just keep selling. Again, you can't go off of technicals. This is why I say don't be going off of technicals this year, because everybody's said, ooh, we broke. We're running to 100K. You can't go off of technicals this year. There is so much, and the bad news is like not just like it's going to go away. No, this is like you're talking about recession bad news. This is some really bad stuff that is going on here. And so this could break right back down and start really selling. I don't think we've hit bottom just yet. There's still just too much we have to get through. And unless those two things change, which the likelihood of them changing does not look like it's changing, you're still going to see a lot of inflation with the rates. And even if the Fed start dialing back in the rates again, it's going to take another quarter to really see the results. Now the market does react on that kind of stuff because it's like, well, we already priced in a lot. So if the Fed's going to make the adjustment, we'll just start pushing up because we already have that priced in. But again, if the forward guidance is bad, the market's going to be like, oh man, well, we're just going to sell off. And then things are looking really bad. So the Fed might come in at a 75-point basis move, and then, oh, well, it's 100 or 75-point basis move. Things just aren't looking good. It's panic time. And so could potentially happen. We don't know yet. We'll see. Again, once panic kicks in, then nothing makes sense. Oil, again, still sitting at $96 a barrel. So not cheap. Tesla actually played this morning off the bounce off the 200. Could potentially hold the 20, but again, Tesla breaks the 798 here. You got a straight gap down to 754. Again, if the market turns, really all you have to do is buy puts, especially on tech, and then that's pretty much your day. Call it a win because it's going to come crumbling down fast. So the thing about Tesla though is that it doesn't just sell; it holds up pretty well. Has a cult following, so it holds up really well. That's why I always say use it for any upside when it sells off, because it always recovers the quickest out of everything. So we definitely have to see. Google still struggling. It's not doing anything. So it leads me to believe. See, it's setting up for tomorrow. We could get a potential push back up to 109 tomorrow. Then if it does well, market does bad, or else this thing is just going to gap down again. If it breaks this 106, I think the whole market's in forward at that point. Again, we're just seeing everything. It's not like this is new, but now it's starting to sink in. BA, I played this briefly today off the second bounce off, got a little bit, and then I essentially just took whatever little profit I had because of the fact that it just wasn't doing anything. There wasn't enough momentum to keep pushing to the downside. Again, the market is waiting on the Fed, and I think it's only going to be disappointed and start selling. Maybe we get some other news overnight or into tomorrow that could potentially sell us off. So still watching this again on the daily. Has a big drop. It can drop all the way down to the 148. So again, you got to break, retest. If it doesn't break back above essentially the 158 tomorrow, this thing is going to sell off pretty heavy. So watching that tomorrow. And the banks, JPM, I don't even know why I bring this up. It looks like junk. Goldman Sachs, it's got a big drop here down to the 306. Could be good if it can't hold that 322 mark. There's another big gap down. Or if it can break above the 333 mark, and get into some pretty clear skies at that point. But I think if the banks get up that high, you're kind of looking at almost the market trying to really rip from that point. Again, you're in a really strong resistance right now. Again, when you start hitting second, third attempts to try to break it to the upside, you will eventually break it. It's just which one it is. That's why I always try to play the first bounces, because the first bounces will get rejected hard because it's the first bounce. Second and third attempts can come close to breaking it, but we'll see. BAC, again, it actually looks pretty good if it could hold above. Could hold above the 34 tomorrow. Could get a pretty clean jump up to the 37, but we'll have to see. Again, the market in general, it's not looking good. And the more news we get, everything's pointing to the recession. Yes, we currently are in a recession. You could say that, but we are just in the beginning stages, right? And we still probably got a potentially next couple of months before we come out of this. I think we could have a sharp recovery out of the recession, but you have to understand that the way that the major corporations are acting right now, it's just the beginning. I don't think we've seen anything bad yet. I think you're just seeing the tip of the iceberg at this point and what could potentially happen. So I don't want that. Again, I'm a permeable, and I adjust every single day. That's why I have daily videos, and it's important to think that way because you don't want to keep trying to continue to buy puts or short the stock market when in fact the market is pushing up and it is full reversal. Not that I see a full reversal coming anytime soon. I think we still need another quarter to try to determine that with more reports, more data, but we'll have to see. So if you made this far, I kind of rambled. There's a lot of information, a lot of very important information, and just kind of waiting on key things tomorrow night with the earnings, and then obviously the Fed on Wednesday. So we'll see what we see, and I'll see you guys on the next one.